Hello everyone. In continuation to our topic budgeting, this is question 15. AB Company Limited manufactures two products A and B and sells them through their two divisions North and South. For submission of sales budget to the budget committee, the following information is available. Budgeted sales for the current year were product A and B they gave here, and North at what is the quantity they can sell, what is the price they can sell. Similarly, South, what is the quantity, what is the price they can sell for both the products they gave. Actual sales for the current year were product A 5,000 at 9 rupees and 7,000 at 9 rupees. Means you may notice that there is 1,000 increase in the quantity, whereas the price is same. Here, there is 1,000 decrease in the quantity for product B, price is same. So adequate market studies reveal that product A is popular but underpriced. It is observed that if the price of A is increased by rupee 1, it will still find a ready market. On the other hand, B is overpriced to customers, and the market could absorb more if the sales price of B be reduced by rupee 1. The management has agreed to take effect on the above price changes. From the information based on these price changes and reports from salesmen, the following estimate have been prepared by divisional managers. Percentage increase in sales over the current budget. They identified for product A in North as plus 10% and South as plus 5%, and product B plus 20% and plus 10% for North and South respectively. With the help of an intensive advertisement campaign, the following additional sales over the estimated sales of divisional managers are possible. Additional sales above the estimated sales of divisional managers, they gave us some quantities for product A and product B for North and South respectively. You are required to prepare a budget for sales incorporating the above estimates and show the budgeted and actual sales for the current year. So we may notice now, to solve this, we may notice now three things. One is for product A, they can increase the price by 1 rupee. Product B, they can decrease the price by 1 rupee. And then we need to consider this percentage increase in the quantity based on the previous sale. Sales over the current budget, sorry, not sale, current budget. And then further, if they give a specific advertisement, further quantity also can get increased. So based on this, we need to do that now. Now, so if we consider the budgeted sale, $4,000 was the initial budgeted quantity. Yeah, this is the initial budgeted quantity. And you can increase this by 10% sale quantity, plus you can add also 600. So 4,000 into 1.1 plus 600. This entire thing can be sold at 10 rupees instead of 9 rupees. That means this will work out to, this is 4,400 plus 6,600, 5,000 into 10, 50,000 will be the budgeted sales. Similarly, for B, it was budgeted initially for 3,000. That quantity can be increased by 20%. And then this 400 also can be added additionally. So 3,000 multiplied by 1.2 plus 400. And this can be sold 1 rupee less, means instead of 21 what was planned, it will be sold at 20. That works out to 80,000. Now for South, we may notice 6,000, and then there is a 5% increase expected, and 700 additional quantity can be sold. 5% increase, 1.05, plus additionally 700 can be sold. This entire thing can be sold at a selling price of 10 rupees. So if we calculate this works out to 70,000. Sorry, this is 50,000. 70,000. Then for product B in South, it was 5,000 planned initially. There can be an increase of 10%, and additionally 500 units can be sold. So 5,000, 10% increase, additionally 500 units, and the selling price can be 20. That works out to 12,000. Well, sales is directly given. For this, it is 5,000 at 9 rupees, 45,000. And for this B, it is 2,000 at 21 rupees. That will work out to 42,000. Here it is 7,000, 63,000. Then this is 4,000, 21 rupees, 84,000. Let us move on to the next question. A company manufactures products A and B. During the year ending 31st December 2024, it is expected to sell 15,000 kg of product A and 75,000 kg of product B at rupees 30 and rupees 16 per kg respectively. The direct materials P, Q, and R are mixed in the proportion of 3:5:2 in the manufacture of product A. Materials Q and R are mixed in the proportion of 1:2 in the manufacture of product B. The actual and budget inventories for the year are given below. Material P, Q, R, and then product A, B, they gave us opening stock, closing stock, and for material, they gave us the cost per kg. Prepare the production budget and materials budget showing the expenditure on purchase of materials for the year ending 31st December 2024. So we have now opening finished goods plus production minus closing finished goods should be the sales. Means production can be calculated as sales plus closing finished goods minus opening finished goods. So on that basis, let us consider product A expected to sell 15,000. So here it is 15,000. Add closing finished goods for product A, it is 1,500 less opening finished goods. Opening finished goods is 3,000 minus 3,000. If we calculate, we will get the production as 13,500. Product B, they gave 75,000 expected to sell, then plus closing stock for product B is 4,500 plus 4,500 minus opening stock is 4,000. That works out to 75,500. Let us move on. Now we'll calculate the raw material requirement. For product A, it is given as 3:5:2. What is that? P is to Q is to R. Which means for P, it will be in the ratio 3 divided by 3 plus 5 plus 2 means 3 by 10. For Q, it is 5 divided by 10. For R, it is 2 divided by 10. So now, this will become now 13,500 multiplied by 3 by 10. That will work out to 4050. And Q, 13,500 into 5 by 10. That will work out to 6750. R, it is 13,500 into 2 by 10. That works out to 2,700. So for B, they gave us the proportion as 1:2, which is for Q:R. That means there is no requirement of P. So here Q's requirement will become 1 divided by 3 and R's requirement will become 1 divided by 1 plus 2. Sorry, 2 divided by 1 plus 2, it is 2 by 3. So this one you will have 75,500 multiplied by 1 by 3. That works out to 25,167. Here it is 75,500 into 2 by 3. That works out to 50,333. So now the total requirement of P will become 4,050. Adding these two, here it is nothing, 4,500, 4,050. So we are adding and then we are writing. Here it is 6750 plus 25,167. We get 31,917. Here it is 50,333 plus 2,700, 53,033. Now let us do the material budget. We know opening raw material plus purchase minus closing raw material will give us the raw material required. Means purchase is equal to raw material required plus closing raw material minus opening raw material. So raw material required for P, it is 4,050. For Q, it is 31,917. For R, it is 53,033. Add closing raw material plus, where is that? P, 3,000. Less opening raw material for P. For P, opening raw material is 4,000. Next for Q, closing raw material 6,000 and opening is 3,000. Plus 6,000 minus 3,000. For R, it is closing raw material is 9,000, opening is 30,000. So plus 9,000 minus 30,000. Now let us calculate 4050 plus 3,000 minus 4,000. It becomes 3,050. Here 6,000 minus 3,000, 3,000 to be added. So 34,917. Here it is. This is 30,000. Sorry. Means 30,000 negative, 9,000 positive, which means 21,000 needs to be subtracted. So 32,033. Rate per kilo, it is given 12, 10 and 8. P is 12. Q it is 10 and R it is 8. If we calculate, first one we will get the purchase value as that is 6,600. So, that is Q, we will have 349,170 means 3,49,170 rupees. Here it is 32,033 into 8, 256 264 means 2,56,264. That is the solution for this particular question.